Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over some options data. Looking at the ChargePoint $2.50 call that expires in May of this year. So getting pretty close to it. And as we can see, we've been trading below a dollar the past couple weeks. And last week we, really came down a lot. So I'm not feeling so great about this one. I think that it will be a loser, and that's probably going to be, I'm not sure exactly how many contracts I have, but I'd be losing more than, $100 on this. But, it's okay. It's not that big of a deal, but this is one that I am actually kind of wanting to get out of. Not only my call position at break even, that would be at 5 cents. We actually did see highs close to 5 cents, and I've actually been considering maybe taking a 20% loss on this. Considering that the highs were 4 cents and not that much volume traded over last week as well. So just feeling like this is going to be a loser. And, some of them are going to be losers, and that's fine. And so rather than trying to really aggressively get my average down to get out, I have actually been selling some cash secured puts to get my share average down. And, I might get out of this position overall because the chart is really just kind of starting to remind me of Fisker, in all honesty. And so I'm don't necessarily want to just be holding this down to zero, but I do think that we might be seeing a little bit of a spike following this kind of massive breakdown to 80 cents was the low. And so part of the reason why I think we might be seeing a bounce with this, it's actually not related, to options data, but actually related to short interest. And so I was just curious about this. I just typed in here short interest for ChargePoint float percentage. And so what we can see is that ChargePoint had a short interest of over 30% of its float on Friday, February 7th. And so with that being said, I believe there's a short interest percentage above 20% is considered to be exceptionally high. So I'm kind of wondering if there might be a short squeeze with ChargePoint. And so that's kind of why I want to get my average down with my shares. So I've been selling some cash secured puts with a strike of $1 that I'm, selling to collect a premium to get my average down. So that premium being 10 to 20 cents, stuff like that. And so not related to this call, just thinking about my shares. But yeah, let's look over at the chart of ChargePoint. And so this is kind of why this is reminding me of Fisker, just that there's this downtrending purple line that we have respected. We've broken below it massively, coming down nearly 12% on the day on Friday, closing at 81.41 cents. So just not feeling so great about this. I do think that it will bounce and reclaim this downtrend, but now that's going to be acting as resistance. Maybe it will be squeezing up to around $1. I think my average is around $2.11. I've got over 1,000 shares, so I need to be kind of aggressively be buying the dip here to get my average down so I could exit, around this level here. It looks like at 108, which was the low from November 21st. Actually, the low was $1.05, and it looks like I've drawn a trend line there. The low over here on November 13th was 108. So I do think that this could be coming up to around 125. It does look like I've got that measurement there. And, that does correspond with this yellow line going back to over here. I think getting up to fill this gap at 169, that's kind of a long shot. I feel like getting up to 250 at this point is an even longer shot. So, I'm just feeling a lot less confident in this. But I do think that we could potentially be seeing a short squeeze maybe over the course of the next month. And so that might be an opportunity to get out. And so in talking about selling cash secured puts. If I do look at the options data over here, the ones that I sold, if I look over at puts, February 21st expiration, I sold a couple of these puts. It looks like the sell fill would be 19 cents. I believe I sold one at 10 cents, so that would be my average for 100 shares. If we do close next Friday below $1, that would be my average fill would be at 90 cents. I sold another one for 15-cent premium, and that would put my average buy for that one at 85 cents. I could have, done it for 20-cent fill. But I didn't want to be too aggressively buying that, because if we do look at the chart, and actually I want to flip this over to calls because that's what my default is. If we do look at the chart, we can see this big red candle. What do we see in the volume? A spike in that volume. So I think that this could be going lower and maybe hanging out below this downtrend. So I am not trying to be too aggressive in getting my average down, but I would like to be able to exit. In all honesty, my share position around 108, I just don't have as much conviction in it anymore. It's a little too speculative. And, at some point, you gotta call it. And so that's kind of how I'm feeling about ChargePoint. But anyways, let's look over at the options data over here. And so, just looking at this one's just the one contract that I have, $2.50, May 16th, expiration at 97 days before this expires. So the clock is ticking about 3 months from now. But just scrolling down here to look at the data, volume's pretty light. So I feel like I'm not going to have too much of an opportunity, scrolling down here to see the highs of 5 cents last hit on January 22nd. But if we do get a spike, if we do get a squeeze, it might be hard to get a fill for my exit. But I just don't really want to be risking too much, putting extra on the table. But anyways, let's look over at the data here, expanding this chart. We can see that for Friday, February 7th, this is just the 1-day data. We can see that this is actually looking not so bad. Maybe the dip is being bought. We do see that the stock price definitely came down a lot over the day in yellow there, as you can see, to get a little bit of a bounce towards the end of the day. But over the course of the day, we saw some selling of calls initially, but then net buying over the course of the day versus net put premium going up, but then selling off towards the end of the day. And so what we can see is that the net put premium came down by nearly $22,000 versus the net call premium went up by nearly $22,000. So that is good. We can see that the volume was increasing even with the selling of puts here. And so that's going to be because those puts were higher premium, lower volume versus, the probably cheaper calls being bought up, but in higher volume. So we see that, while the numbers here, the net put premium going down 22,000 kind of balances the net call premium going up 22,000. But we see that the volume was increasing. And so that's because fewer of these puts were being sold, but at a higher premium, taking profits on those puts versus buying the dip here in these calls. More contracts, more volume, lower premium. And so that's why we see that here. And if I scroll up, we can see the bear bull slider here, about 54% going long on the bullish side versus, with a little bit of neutral. But overall, even if that neutral is all bearish or more on the bearish side, the majority clearly is more bullish. So that is potentially looking kind of good. If we flip over to the 14-day data here, we can see that, in yellow, that just the stock price getting annihilated here last Friday. We did see a lot of calls being sold here. It looks like on Wednesday, the 5th, net call premium came down by 73,000 contracts being sold versus net put premium spiking up by about $53,000. So that was not looking so good, and that was followed by this down move. hopefully, the bottom is in and or near. And so we might be seeing, the end of that. But anyways, I did want to also look for this one, ChargePoint, look at the Greeks. So wanting to look at the options data here. And so we can see that the expiration for February 7th was $1, not too surprised. And we did close below $1 at, let's see, 82 cents in the after hours, but closed right around 81.41, I believe. And so that was out of the money for this contract. And what we see here for Valentine's Day, February 14th, is again, the max pain is $1. So maybe we get a bounce, maybe we get a short squeeze and start to go above $1, close in the money there. And we can see that the following week for February 21st, for the monthly expiration, the max pain is $1.50. And if we can get above that, the following week again, we see, or continuing, I should say, we see the max pain is actually 50 cents. So if we can start to close above $1 next Friday on the 14th, and then continue to 150 the following week, that could definitely be triggering a gamma squeeze, because for February 28th, the max pain is only 50 cents. And so if we're closing even above $1 a share, that could really spark some moves to the upside. And so, yeah, I think that we could be seeing some dip buying opportunities with the current price right now. And then that would be a great time, maybe a month from now, to get out of the contract that expires in May, as I don't think stock price is going up to 250. But if it's getting up to around 125, 150, that could be triggering a gamma squeeze. So look for that. There is definitely some hope. And, as we have respected this downtrend going back to the close of September 9th of 2024, I do think that we will eventually be reclaiming that. And psychologically, I think that, $1, and also, as far as the listing goes of ChargePoint, that's a very important level. So do keep that in mind.